I'm down about 7,500 and this loss is sort of getting out of hand, and this is much bigger than what I'd expected. So I'm down almost 11,000 right now, and this is one of the biggest loss I've had in my entire life.
I declare bankruptcy!
And you can see that I booked a profit of about 12,000 today. Today was one of the hardest trading days that I've experienced, and I've been trading for like 4 years now, but this day was not a good day for me. I made a lot of mistakes today, and this video is like a summary of all the mistakes I made, what I did wrong, what I could have done instead, and what I've learned from today's experience. Hello everyone, I'm Vikrant, and this video is about how not to trade a huge gap down or a market crash. This is completely based on my experience. Learning these lessons was expensive for me, but it doesn't have to be that way for you. So in this video, I'll share my experience with a loss that I incurred today. This video is divided into 3 parts. The first one is my analysis before the market had opened. Now the reason why I'm showing you this is because the way I had analyzed the market was correct, but even though it was correct, I still incurred a loss. Good morning guys, welcome to today's pre-market analysis, and today is 19th April, that is Monday, and I have a feeling that the market is going to crash today. So here's my analysis for Monday, and you can see that there was a head and shoulders pattern in Bank Nifty, and then there was a huge gap down on Monday. Bank Nifty crashed, and for the rest of the week Bank Nifty tried to come back up, and it managed to fill the gap, but it almost managed to fill the gap, and there's a range in Bank Nifty, and if Bank Nifty opens in this range, we can expect a beautiful downtrending market on Monday, that is today. So this is where I want Bank Nifty to open, but it should open in this particular range. Only that way I'll be able to make best of my trades. Now if Bank Nifty opens, let's say, a little bit of gap up, that won't do anything because there is a resistance, there's a bigger trend line over there, so it will again act as a resistance, and there's another resistance back up. So if Bank Nifty tries to go up, there will be a lot of resistance points, and Bank Nifty will probably end up going sideways for the entire day. So if there's a gap up opening, Bank Nifty will go sideways. If it opens flat or a small gap down, it will be highly bearish. And if there's a huge gap down, then also it will be bearish, but it might go sideways for the entire day. So I'll trade more cautiously. So this is my view for Bank Nifty, and I could be completely wrong on this. And if that happens, I might lose some money. But I still have a strong conviction that on Monday the market will fall significantly, maybe even 2% or 2.5%. Now, the reason why I think there would be panic selling is because of the rising COVID cases in India. So the graph, the COVID cases had declined in India in December, I would say, but then again they have shot up significantly, and we are at an all-time high. So this will create a panic amongst investors. And by now you would think that COVID would have already been discounted in the stock market, but that does not seem to be the case. So every Monday the market falls because of lockdown news, COVID, etc. And the second reason is HDFC Bank. HDFC Bank results came out, on Saturday, I would say, or Friday, something like that, and it was below the street expectations. HDFC Bank has the biggest weightage in Nifty, so if HDFC Bank goes down, Nifty will also go down, and you can see that the pre-market does not look good. The market is about to open and all the sectors are in the red, and let's see where Bank Nifty opens. So the first candle is all the way over there, so that is a huge gap down, and that is to prove that even though your analysis could be right, you could still end up with a loss. Analysis is just like 10% of trading. Entry, exit, trading psychology, risk management, all these things make up the remaining 90%. In the second part, I'll show you the trades that I had taken today. I'll go over my profit and loss, my order book, and what I actually did wrong. If you want to learn the practical part of trading, of how I actually trade and how I manage a loss, then this is the right video. I'll try to maintain complete transparency, And in the third part, I'll share the 7 lessons that I learned today. And I'll also look, and then we'll also go over some past data to see how the market reacted in the past when there was a big gap down opening or a market crash. So these are the 3 things that I'll discuss today. This video might be a little bit long, but this is something that I have not seen on YouTube. Like, this topic is something I have not seen on YouTube, and I think that if you watch the entire video, even at 1.5x, it will be of tremendous help. Smart people learn from their own mistakes, but wise people learn from other people's mistakes. So you can learn from my mistakes and you can avoid these mistakes in the future and save some money. What's up everyone, this is Vikrant. Welcome back to my channel. This channel is mainly about the practical aspect of trading. I try to go over things that are not usually available on YouTube, and I try to explain the things that are a little less known, and I also share live trades sometimes. If you haven't already subscribed to this channel, do so by clicking on the subscribe button, hit the bell icon, and don't forget to follow me on Instagram. If you have any questions, comment below or just DM me on Instagram, and I'll try to answer them as soon as possible. Let's begin. Okay, so this is my profit and loss statement for today. Let me just refresh the screen. Yeah, here you go. So I have made a loss of almost 7,000 rupees, and this is the order book, and I've only traded in 5 stocks, but if you go over my order book, I have taken like too many trades today, so the brokerage is also going to be huge. Yeah, let's talk about these trades. Let's talk about the first trade, that is TCS. Now this was an absolutely dumb trade. I shouldn't have taken it, and I could have easily saved like 8 grand if I had avoided this trade. So I taken this screenshot at around 1 p.m. and you can see that actually I was down about 20,000 rupees, and this was not good because my general risk appetite is around 5,000, maybe 6,000, and I was actually 4 times over that limit in a single day. So this was a horrible day, and then I took some trades and managed to close the day with 6,000 with a loss of 7,000. So here are 7 things that I learned from today's trade. The first lesson that I learned today was, if there's a big gap down, and by big I mean more than 1%, if the gap is more than 1%, trade with half the quantity. So if you usually trade with 500 shares, trade with 250 shares. If you trade with 10,000 shares, trade with 3,000 or 5,000 shares. So trade with 30 to 50% of your original position size. And the reason is because whenever there's a big gap down, the market is usually pretty volatile. So if let's say that next Monday there's another big gap down of 1.5%, rather than going with 1,000 shares or 2,000 shares, I would go in with 50% of my usual position size, so that even if it goes against me, my loss would be about half of what it could have been. The second point that I learned today was that most of the move has already happened. Now this may seem like an obvious thing, but this is a support area for the stock. Okay, so if you were to take a short position, what would your target be? So this could be a target, this could be another target, somewhere around here could be a target, and finally this could be a target. So these are some possible target points that you can aim for. But what if there's a big gap down? Let's take today's example. There was a big gap down, so you can see that the index opened at 31,000. So this level broken, this level broken, this level broken. So your first 3 targets have already been achieved, and you couldn't even take the trade because there was a huge gap down, so you cannot trade here. And even if you enter here, what is remaining is your final target. So you can see that the index took a support at this point and then went up. The next lesson I learned was, wait for the first 5-minute candle to close. Now I already knew this, and this is something I struggle with. Like, I enter the trade a little too early, which is a huge mistake in my opinion, because the first 5-minute candle is extremely volatile and it could look super bearish in the first 1 minute or 2 minutes, but by the end of the first 5 minutes it could turn out to be a pretty bullish candle. If there's a huge gap in the market, your stop loss will also be very huge, which will result in a poor risk to reward ratio. What do I mean by this? Now this is Reliance. So where would you keep your stop loss? Because let's say that you take an entry over here, you can set this as your stop loss, maybe even this, but again, if you keep this as your stop loss, then your target needs to be at minimum somewhere around here, and that kind of move is generally not possible in the market. One of the ways is, let's say that you took a trade over here, you can keep this thing as your stop loss or the high of this candle as your stop loss. So these are the only two logical points that I can see. So these are just three ways of setting a stop loss, but the more efficient way that I found out to be is wait for some time. Now, being patient sounds pretty easy, but it is one of the hardest things to do in live market. Let's say that this candle has been formed and then the stock sort of goes in a range. Been broken with this big candle which has high volume, you can take a short trade over here, and somewhere around this could be your stop loss. So let's say that you take an entry over here and this is your stop loss, and even with 1:2 risk reward ratio, this is still a very practical target, and if you wait long enough it would have been hit easily, and if you had waited for some time it would have been hit. Fifth lesson is that if there's a gap down, then the market will probably be sideways for the entire day, because most of the move has already happened. And let me just show today's example. So this is Kotak Mahindra Bank, and this is one of the stocks that I like to trade in. So there was a big gap down, the stock went down for some time, and then for the entire day it was kind of sideways. This is Reliance again, and you can see that there was a big gap down opening and the stock was sideways for the entire day. It did not move much. So this is Axis Bank, and this was actually one of the stocks that I traded today. But another thing that you can do is wait for a green candle to form. So this was a candle that was formed, and once the low of this candle was broken, you could have entered a short position at this point. If there's a huge gap down, the first few candles are generally red, and then after, I would say, 10:30 or 11 o'clock, the stock moves sideways for the entire day. And this is generally what happens. The sixth point is short covering rally before the market closes. Now this is one of those things that helped me tremendously today. So like I said, I was down 20,000 at around 1 o'clock, and in about 1.5 hours I managed to go from minus 20k to just minus 7k. So I had recovered more than half of my loss, and short covering is the reason why that happened. Here are a few examples. This was ICICI Bank that I had traded in today. So you can see that even after a big gap down opening, there were still points to take a long trade. Like once this was broken with this candle and heavy volume, I did take a long position over here. I closed it somewhere around this point, and then when this was broken, this range was broken again with high volume, I took another trade and I closed it somewhere around this point. So the point I'm trying to make is that even on a bearish day, there might be certain short covering that can happen after 1 or 2 p.m. and you can take advantage of it, because when this happens, the candles are extremely big in size, the volume is also great, but it does not last that long. So this is another stock that I traded in today, and this is HDFC Bank. I was waiting for short covering in this stock as well. So this is 1400 level, this is a resistance. You can see this is also a round number, and there is an ascending triangle like pattern. So once this range was broken with extremely high volume, I just took an entry, and somewhere around here would have been my entry, this would have been my stop loss, and even if you go with 1:2 risk reward, that is still a pretty good trade. So short covering generally happens after 1:30 or 2 p.m. whenever the market falls drastically. So the seventh lesson to learn is that trade in weak stocks, not the strong one. Now this is another big lesson that I learned today, and the current market, pharma stocks, IT stocks are doing really well. So when I was trading today, most of the stocks were down about 3% in the pre-market. TCS was one of those stocks that was down less than 1%. So it was down only about 0.8% in pre-market. And once I saw that, I decided to short TCS because it was only down 0.8%. And if all stocks are falling, this has more space to fall compared to a stock that is already down 3%. That was my logic behind it, but it was completely wrong. The reason why TCS was not as down as other banking stocks. Now, even if you take the example of Wipro, there wasn't a big gap down in Wipro either. So this was the closing price, and you can see that almost 0.7% gap down. And you would think that there's only 0.7% gap down. So once this range is broken, I will short it, and this could be my next immediate target. But what I failed to see was this big rally that had happened. Because of this, the stock was strong. So even though the entire market was down 2-3%, Wipro still managed to stay flat. Wipro still managed to end in green. Even in case of Cipla, a pharmaceutical stock. So you can see that it did not open gap down, rather it opened gap up, and even with that opening there was a big red candle, and then the stock rallied up and consolidated for the whole day. The point I'm trying to make is that if I'm looking to short a stock, I'd rather pick a weak stock than a strong one. And if you look at a weak stock, so DLF is a weak stock, it is a fundamentally weak stock. So on a red day, a fundamentally weak stock, even though there was a big gap down, it still fell more than pretty much any other stock. Similarly, RBL Bank, not a very fundamentally strong stock, it is down 6.5%, DLF down 6.2%, and the reason is because these are fundamentally weak stocks. So these were the 7 things that I had learned today, and even though I made a loss, this was actually a decent day. I was able to recover most of the loss, and I also learned a few things that I did not know before, so that will help me in the future. So today is 30th April, and you can see that Bank Nifty had opened about 1.4% gap down. So you can see that the last time that happened was on 19th April, which was a Monday, and this was the day where I made a pretty big loss, and this was the day where I decided to make that video. And this is like an update of that video because I did not get time to edit that video. So you can see that the condition today was also a bit similar. So there was a triangle pattern, a huge gap down. The point of extending this video is to show you that what I had learned on 19th from my mistakes, I've actually applied it today, because this was a very similar situation. A big gap down, and it was not as big as the one we had seen earlier, but it was still a pretty good gap down. And now what's even worse is that I was expecting a bullish day today because the markets have been rallying for quite some time. So these are the trades that I had taken today. Let me refresh it. So I'm trying to learn scalping, so a lot of these trades are scalps, and you can see that I booked a profit of about 12,000 today, and these are all the trades that I had taken today. And the reason why I'm showing you this is because last time we booked a loss of about 7,000, I would say, and today I've recovered that loss. And the thing is, the same thing happened today, what we had seen on 19th. And after I analyzed what had happened then, how I could have prevented it, what I learned, I applied it in today's trades, and I came out profitable. So these were the lessons that I had learned on 19th where I lost money. And the first one was, if there's a big gap down, trade with half your quantity. And today I traded with about half of my capital, maybe 55%. So I reduced my capital by almost half, but my profit was actually increased. So the first point I actually followed today. So the third point was, wait for the first 5-minute candle to close. That is, don't jump into trade too early. And if I show you my order book, you can see that the first trade I took was at 9:30. So for the first 15 minutes, I did not do anything. I did not take a trade. So you can see these 3 points. That is, if there's a big gap down, the market might be sideways for the entire day. And you can also see a short covering rally before the market closes. And the last point is, if you're shorting, short weak stocks, not the strong ones. And if you're going long, go long on the stronger stocks, not the weak ones. Actually practically implemented all these 3 things in today's trade. And if we go to today's chart, you can see that after the big gap down, the first couple of candles were pretty bearish, but then there was some sort of rally, a little retracement, and again a rally. So even if the first 10-15 minutes looked extremely bearish, there was a big rally. So if I had kept my stop loss at this point and I had taken a short trade over here, I would have been stopped out at this point. If you talk about the various sectors, you can see that steel or the metal sector is one of the strongest sectors right now. And that is the reason why I decided to take a long trade. If I'm going long on a bearish day, I'd rather go long on a super strong stock than on a weaker one. So at around 9:31, I'd taken a long trade. So this was the candle at which I'd taken a long trade, and I sold it somewhere at this candle. And the reason why I sold it so early is because there's big rejection at this candle, rejection at this candle. This is a doji, and then there's again a bearish candle, and I'm taking a counter trend trade. So these are the reasons why I decided to exit my position early, but I still made a good profit on that one. And you can see that I had even taken a short trade in HDFC Bank. So HDFC Bank is down about 4% today. So I'd taken a trade at around, so in HDFC Bank I'd taken a trade at around 11 o'clock or 11:15. So this was the candle that was formed. So after this breakdown, I had taken a short trade in HDFC Bank just because this was the weakest stock. So I went long. So I went long on the strongest stock, and I went short on the weak one. So the whole point of making this update in this video and dragging it another 10-15 minutes long is that I had learned 7 things on that day, and I lost some bit of money. But today the exact same thing happened, and today I did not lose money. Rather, I made about almost double of what I had lost that day. So I've actually implemented these things in my live trading, and this is the whole point of this video, because avoiding mistakes in trading is not possible. I've made hundreds of mistakes, and I'm pretty sure I'm going to make hundreds of more mistakes, but learning from those mistakes is extremely important.
You know what they say, fool me once, strike one, but fool me twice, strike three.
So whatever trades you take after making a profit or making a loss, what I would suggest you to do is analyze your trades, find out what went right, what went wrong, and when you have case studies about the mistakes you make in the live market, these are the things that you don't forget. And if you implement these in your live trading, making a profit will be much more easier. So thank you so much for watching this video, and I know this video was super long, not that interesting, but I think that I've covered a lot of valuable points that most YouTube videos don't show, and I've shown my loss and how I was able to overcome it. So this was like a big video, and if you have learned something, give it a thumbs up, subscribe to my channel for more videos. I'll try to make more live trading videos and more practical videos, and if you have any topics that you want me to make a video on, then just comment it down below, and if I know about that topic, I'll make a video on that. So thank you for watching. See you next time. Till that time, take care. Bye bye.